Most people work harder, but they never seem to get ahead. Why? Because they're playing a rigged game. In 1971, the US dollar stopped being backed by gold. It became debt. Every dollar printed since then is borrowed money. And with every new dollar, your purchasing power shrinks. If you're working for money, you're on the losing side. The rules are designed to take more of what you earn: taxes, inflation, market crashes, and bad financial advice. The rich, they play a different game. They don't work for money. They make money work for them. Come to the passive path. Today, you'll learn how to think like the wealthy, how to break free from the financial traps set for employees and small business owners. This won't be about cutting lattes or pinching pennies. It's about seeing the big picture and acting on it. Let's get started. Most people think small. They focus on job security, on saving a little, on following mainstream advice. But the wealthy think macro. They look at how the entire economy works, how governments, banks, and money interact, and how to position themselves where the money flows. Since 1971, two things have powered wealth: debt and taxes. The government prints money that creates inflation. Inflation raises prices, and the poor and middle class pay the cost. But the rich use debt to buy assets: real estate, businesses, commodities like gold and silver. Then they use the tax code to legally avoid taxes. Because when you own assets, especially with debt, the system rewards you. Meanwhile, most people follow advice meant to keep them poor: save cash. But cash loses value every year. Work hard and get a good job. But jobs are taxed at the highest rates. Invest in a 401, but Wall Street controls what you can invest in. The wealthy do the opposite. They control their money, create better investments. They multiply their wealth while paying little or no taxes. Think about this. If you had a chance to legally pay no taxes and get banks to give you money to buy assets, would you take it? That's how the wealthy operate, and you can too. But first, you have to stop thinking like an employee. Start thinking like a capitalist. Your job is not to work for money. Your job is to acquire assets. The passive path is about that shift. It's about moving from labor to leverage, from working for dollars to owning streams of income. In the next part, we'll talk about the single most powerful tool the wealthy use to build lasting wealth, and why avoiding it could keep you poor forever. Stay with me. OOL is debt, but not the kind of debt most people fear. Bad debt is used to buy things that lose value: cars, clothes, vacations. Good debt is used to buy assets. Assets that grow in value. Assets that pay you every month. The wealthy love good debt, because debt lets you buy more than you could with cash. And when inflation rises, it makes that debt cheaper over time. Borrowing $1 million today and paying it back with tomorrow's weaker dollars. That's what the rich do. They borrow to buy real estate. They borrow to build businesses. They borrow to create cash flow. And they legally reduce their taxes in the process. Banks are willing partners in this strategy, because when you buy productive assets, banks feel secure. They know the asset can pay the loan or be sold if needed. Now, most people are afraid of debt because they've only seen bad debt destroy lives. But that's like fearing fire because it can burn. Fire can also cook your food and warm your home. Debt, when used wisely, builds empires. It's how the wealthiest people and companies operate. Amazon, Apple, real estate moguls. They all use debt to grow faster than cash alone allows. The passive path teaches you to think like them. But debt is only part of the equation. The other part is tax strategy. When you use debt to buy assets, you often pay less tax. Real estate investors can deduct interest payments, depreciate properties, defer taxes through exchanges. Business owners can write off expenses and reinvest profits to grow further. The tax code rewards those who create value, who provide housing, who build businesses, who invest in the economy. If you follow the employee path, taxes are your biggest expense. If you follow the investor path, taxes become a tool. Now think about where you are today. Are you working harder, but keeping less? Or are you making money work for you while reducing taxes? Most people stay on the treadmill. The wealthy step off. But there's an even bigger shift happening now. One that could change wealth creation forever. And you need to understand it before it's too late. Let's talk about decentralization. For decades, wealth moved through banks and governments. They controlled money. They controlled credit. They controlled who could build wealth. But that's changing. The rise of decentralization is breaking their monopoly. First, money itself became decentralized. Bitcoin, Ethereum, stablecoins. No single government controls them. No single bank issues them. Then trading became decentralized. Decentralized exchanges let people trade directly. No brokers, no middlemen, no restrictions based on location. Next came unique digital assets, NFTs. They represent ownership of digital or physical items. Art, music, real estate shares. Now, even ownership is decentralized. Smart contracts enforce the rules automatically, without courts, without paperwork. This is more than a trend. It's the birth of a new economy, an economy where you can raise money from investors worldwide, issue ownership shares as digital tokens, collect rent or revenue directly in cryptocurrency, distribute profits automatically, all without relying on banks or governments. Imagine building an apartment complex, funding it with crypto, issuing NFT ownership shares to investors, collecting rent in stablecoins, and distributing profits instantly to token holders. This is not science fiction. It's already happening. And it's only the beginning. In the next decade, we'll see a fully decentralized economy, where assets can be bought, sold, and managed entirely on the blockchain, where governments will struggle to keep up, and where those who understand this shift will create enormous wealth. At the passive path, we believe this is the future, and the time to prepare is now. But decentralization also comes with challenges. The biggest threat is already taking shape. Let's talk about FedCoin and central bank digital currencies overmints. See what's happening. They see power slipping away. They're responding. Central banks are developing their own digital currencies. FedCoin in the United States. The digital yuan in China. Others will follow. At first, this might seem like progress. Faster payments, easier transactions, modern technology. But the real goal is control. The central bank digital currency, governments can track every transaction, freeze accounts instantly, set spending limits, control interest rates directly in your wallet. Cash will disappear, privacy will vanish, and those who depend on centralized money will have no escape. This is why the wealthy are moving their assets into real estate, into gold and silver, into Bitcoin and other decentralized assets. They know what's coming. They know that when bad money floods the economy, good money hides. It's happened before. It will happen again. When FedCoin launches, expect inflation to accelerate. Expect more taxes. Expect more control, but also expect opportunity. Because every time governments tighten their grip, innovation finds a way out. Decentralization will keep growing. Private solutions will emerge, and those who understand both systems will thrive. At the passive path, we don't fear change. We prepare for it. In the next part, you'll see how the wealthy are positioning themselves today, and how you can do the same. Wealthy are not waiting for permission. They are not following the herd. They are moving their assets into places the government can't easily touch. Real estate remains a top choice. It meets a basic human need, shelter. It produces cash flow. Through rent, it appreciates over time, especially during inflation. It offers tax advantages, depreciation, interest deductions, 1,031 exchanges. And most important, banks are willing to lend against it. Good debt turns real estate into a wealth machine. The wealthy also own precious metals. Gold, silver, they are time-tested stores of value, not controlled by any government. Resistant to inflation and currency collapse. And then there's crypto, not just Bitcoin, but also Ethereum, newer, more advanced blockchains. The wealthy are not betting everything on one coin. They're diversifying, spreading risk, positioning themselves for the future. Some are even combining real estate and crypto. By tokenizing property ownership, raising funds on-chain, collecting rent and stablecoins, and distributing profits automatically. This blends the old world with the new, creating income streams that are harder to tax, freeze, or control. But the biggest investment they make isn't in assets, it's in education. They study the macro picture. They learn how money works. They understand debt, taxes, and leverage. They seek mentors who are ahead of the curve. And they take calculated action. At the passive path, this is what we teach. Not just where to invest, but how to think. How to see the big picture. The future will reward those who think bigger. The employee mindset will struggle. The investor mindset will thrive. In the next part, I'll show you how to start taking action today, and how even small steps can lead to massive change over time. You don't need to be rich to start, but you do need to start. First, assess where you are. How much of your income comes from work? How much comes from assets? If the answer is mostly work, your first goal is clear. Shift toward income-producing assets. Second, build assets before liabilities. Before buying a new car or a bigger house, invest in something that pays you. Real estate, dividend-paying stocks. Crypto projects with real utility. Third, use debt as a tool, not a trap. Learn to borrow for assets, not consumption. Start small, prove the model, then scale. Fourth, keep learning. Financial education is a lifelong process. Read, attend seminars, join groups, follow trusted mentors. At the Passive Path, we believe in continuous growth because the world is always changing. Fifth, invest small to learn big. Put a little money into new opportunities. Forces you to pay attention, to study, to grow. Education without action is entertainment. Action turns knowledge into results. Sixth, diversify. No single asset is bulletproof. Spread your wealth across real estate, metals, crypto, and business interests. Seventh, stay adaptable. The future is unpredictable. What works today may change tomorrow. Stay flexible. Be ready to pivot. Finally, think bigger. Don't aim to just survive. Aim to thrive. Build generational wealth. Create income streams that last beyond your lifetime. Most people never escape the paycheck to paycheck cycle. Not because they can't, but because they never learn how. Now you know the path, the passive path. It's not easy, but it's simple. And it works. If you found value in this video, like and subscribe. Comment below with the first step you'll take today. Your journey starts now. You've seen how the wealthy think, how they use debt, assets, and decentralization to grow their wealth, and how they prepare for changes most people never see coming. Now it's your turn. Start small, stay consistent, keep learning, and take action. This is the passive path, where you stop working for money, start making money work for you. If you found this video valuable, like and subscribe. Comment below with your biggest takeaway. And share this video with someone you care about. Help them start their journey too. Good luck on your path to financial freedom. Feel free to explore other videos on this channel. I'll see you in the next video.